Well, let's return to the markets. Srivatsa, the EVP and fund manager of equities at UTI Mutual Funds, now joining us. Good afternoon. Look at what's happening this Boxing Day. Are you convinced that we're in the midst of a bear market? And then how can India be an exception, especially with 2019 likely to throw up so much uncertainty, be a volatile year with general elections, etc.?
Yeah, actually, if you look at the data points, India does seem to come out as an outlier, especially if you compare the performance on the global markets. But what I would like to highlight is that I think Sensex has been an outlier, but not most of the other indices. So if you look at even the BSE 200, there is a gap of 600 bips between the Sensex and the BSE 200 performance in the last 1 year. So this goes to show that there is a lot of pain. In fact, I would say 60-70% of the stocks have underperformed the market, which is probably what you would loosely define a bear market. While the overall, benchmark indices have been positive and have outperformed the other markets significantly, but I would say for somebody who's managing money in India or who's an investor, he would probably be closer to thinking that this is actually a bear market that we are in. And coming to the next year, I think there would be a lot of uncertainty before the political elections or before the general elections, which would kind of compress the growth in the markets, and the markets would be sideways. In fact, it could be negatively biased given the huge negativity that we have been seeing in the global markets.
So when you look at the underperformance of the stocks, and we've been reading about it also, how brokerage firms have been absolutely wrong in 2018 in getting their target prices correct, and the forecast even close to where we are closing the year at. What is that fund managers like you are looking at, researchers are looking at, firms like you are looking at, how to decide on all of that? With not very good research being out there, but more importantly, will this sell-off now make blue chips far more attractive?
Yeah, so if you look at a couple of sectors, I think the sell-off has made the sector quite attractive. Like for example, automobiles, I think that's been a very consistent performer over the last many years. And the last 6 months or even the last 1 year, it's for the first time the sector has underperformed the overall markets. Now, on the longer term, still, I think the market is quite attractive in terms of low penetration and very good industry and very high cost competitiveness, and an industry which by and large generates decent amount of free cash flow and ROCE. So the valuations have kind of come across for this sector in the last 1 year because of the huge underperformance, and largely on account of short-term demand factors which may not exist, say, after a year or so. So from a longer-term perspective, we are looking at these kind of sectors which has done very well over a longer time frame, going through short-term challenges, and because of the valuation part, we are getting it at a very reasonable valuation relative to the longer term history. The other sectors which could be looked at, especially IT, while it's done very well on a 1 year time frame, but on the last 3 months because of the rupee appreciation, it has underperformed. But here again, the valuations are extremely reasonable. It's at a slight discount to the market. Again, the sector generates huge free cash flow, and more importantly, has a mechanism of distributing the free cash flow back to the shareholders as well. And here again, I think this also could be a very good hedge against any kind of political instability or any general elections outcome, because there are no much linkages to the Indian economy at all. So I think these are the couple of sectors which really looks good from the next 1 year perspective.
Right. Let's talk about the first half of the next year. Let's talk a bit about the medium term, because next year globally also we have the Brexit, we have Fed possibly raising rates once again. Then we, of course, on the domestic front, we have the general elections. How do you see the market play out? What is the kind of outlook that you are going ahead with, and how are you placing your bets from the near to medium term point of view?
As I said, I think near term, the number one uncertainty I see is the outcome of the election. So To that extent, I think there could be an increased allocation to sectors which probably don't have much of a bearing on the local economy or even on the government policies. So an IT or a pharma could be a very good hedge against this. The second one, as I said, is probably looking more from a valuation perspective is automobiles or even corporate oriented banks. Especially in case of corporate oriented banks, where there is a clear trend of return to the kind of average profitability that these banks have enjoyed. And again, while the valuations have increased moderately in the last 1 year because these banks have outperformed, but still they are cheap on a 10 to 15 year kind of basis. So our focus is more on probably looking at on a medium term what sectors we are getting it at a very reasonable valuation, and sectors which really look very good on a which have delivered well in the past, and again we see no reason why they can't deliver this performance over the next 3 to 4 years. So if we are getting these sectors at a very reasonable valuation because of the global uncertainty and the local uncertainty, we will focus on that. And to hedge our portfolio against any adverse outcomes of the elections, there could be a decent allocation towards IT and pharma, which could protect us in case the scenario turns adverse.
Much for joining in with your perspective and your outlook as well going into 2019. But before we